So today we're really going to talk around how home insurance specifically can help protect people's assets, things that they should be aware of, that they should know, and maybe some things to make sure that they're really paying attention to.
Yeah, definitely. Thanks for having me.
Of course. So maybe if you want to just introduce yourself a little bit so we can give some background and then we can go through some information.
Sure, perfect. My name is Jackie Rocha. I'm with Acrisure. I've been doing insurance for about 6 years now, and yeah, I'm happy to help answer any
Awesome.
questions.
Well, thank you so much. I know that we have a presentation here that we'll kind of walk through, but really just asking questions and kind of talking about what homeowners insurance is. There may be people on here that own a home and understand kind of the basics of it. Maybe some have deep dive and understand it. But I think that I would go to venture a lot of people don't realize a lot around the homeowners insurance. So maybe if you can give a brief description of what it is.
Yeah, definitely. Well, that's one of the biggest assets that it was designed, God forbid, anything happens as far as like your house were to burn down, then you have that protection to rebuild it. So that's really what it's for. And then obviously protecting your home, your assets, your personal assets inside, and your liability. That's the biggest. As far as insurance and protection, that's kind of what it's for. More catastrophic. A lot of people do claims that are a little bit, maybe a little bit water claims as far as your bathroom and you have a leak and then, you call in. That is what it's for, but more built on catastrophic. So fire, a windstorm comes through and it blows half of your um, roof off or something. That's really what it's really based for. But it's just really honestly to protect your asset, that investment that you bought. So it's one of the biggest investments we buy.
Yeah. Whenever you have a mortgage, you're required to have homeowners insurance. And that's because the lender
Correct.
is at a great risk if something happens to the property. They need to make sure that it can be rebuilt or that it could
Mhm.
be repaired or things like that, which is why it takes care of those big things. But it also has these things, like you said, it has liability protection. So, if you have a pool or maybe someone gets hurt in the pool and they place a claim against your insurance or personal property, I know for our policy, you can add on additional policies too for jewelry or guns or things like
Mhm.
that. So you can add additional personal property in addition to those
Mhm.
things. However, what I have found, depending on what you're, putting in a claim, like you said, if there's water damage, you can have something done in your home. You get a quote. It's like $1,000 to fix it, and maybe your deductible for your homeowner's insurance is 2,000. You're not
Mhm.
going to place a claim, right?
Right.
You're just going to do the repairs yourself. So I think a
Right.
lot of the little things that could be covered, depending on your deductible, you may not even place a claim, and you wouldn't want to because, placing claims could have some impacts on your insurance as well, which we can talk about as well.
Yeah,
There are
definitely.
two main insurance policies, maybe more if you want to add them, but you have kind of your standard insurance. And then here in California, we have California Fair Plan. So maybe if you want to give a brief description of the two differences of the policies.
Sure. I mean, to the California Fair Plan was really designed years ago for high risk, um, like high risk, high fire areas. Like up in the hills or the mountains or somewhere where, you exhausted all opportunity to get something and nobody was going to, insure you. So that's kind of what the California Fair Plan was designed for. However, we're seeing it now with the shift in insurance. A lot of companies are not writing home and they're writing auto, or they're writing auto, vice versa. So now the California Fair Plan is an option for us, at least for the time being. Um, and it's just a little bit of, it's the level of coverage that you get with a standard policy is a little different than you get with the California Fair Plan. It's really mainly for fire, and then you have to do, they call it a companion or a wrap policy, which that will bring in your liability, your water, and that area. So initially you have to have two policies to make a standard policy. And that's kind of what the California Fair Plan is really, really based on, is really fire. But we are seeing it right now because, like I said, a lot of companies are not writing in certain areas and we're having to use it. And like I said, it's just a little bit of the level of coverage that is a little bit different. So,
Yeah, I mean,
um,
normally when you would buy a house, it's kind of like shopping. I always say it's like shopping for a car, you shop for insurance. Same thing with the
yeah.
house. You could shop for insurance and you may go to your, insurance company and they may say, "Hey, sorry, we can't write a policy for this," which is what was happening. And so
Mhm.
they were like, "Well, what do we do if we can't get insurance on a home? Well, now they can't get a mortgage on a home. That affects real estate, which is one of the biggest things that keeps the economy going." So
Right.
California said, "Okay, we're going to create this California Fair Plan. So there is insurance available for the homes that don't qualify for your standard policies. So if you
Correct.
don't qualify for a standard policy, you can get the California Fair Plan, which is what it sounds like, right? California for
Mhm.
the Fair Plan. So it means that if there is a fire, then it will cover in that situation when there's a fire. But like you had said, if it's not a fire incident, we still need to make sure that you have insurance coverage for all the other things that we had talked about on the last slide, where it was talking about the, liability, personal things like that. That's your wrap policy, as you call it, or DIS policy. So
Mhm.
there's two separate policies to make sure that you're fully insured on the property. So it depends on the
Correct.
area. I think that there's a lot of people that had a standard policy, have owned the home, and all of a sudden they've had to move over to the California
Mhm.
Fair Plan and additional policy, which is, more expensive, typically higher deductible, things like that. In most cases, not always,
Yeah.
that
Not.
you have to
Yeah.
be concerned with.
Yeah.
So if you're in California and someone's saying, "Hey, we don't have any, options for you," you could reach out and do a California Fair Plan, which you do through an insurance company such as yourself. So it's not like you have to go to
Correct.
the, California and say, "Hey, give me an insurance policy." You would still go through Jackie and she can get you the California Fair Plan.
Exactly. Yep. And we're seeing that happen like a lot. So it's kind of becoming the standard right now. But
Yeah.
and really I tell people it's not forever. I know, like I said before, the insurance is kind of going through like a rebuild, if you will. But you can we can always move you, so a lot of homeowners get a little nervous, like they've been with their current policy for so many years. But I always say, that the California Fair Plan is not, you don't have to stay there. We can revisit that in 6 months. We can revisit that in a year. We can get you out of there. It's just, at least right now, we are something, it's better than not, not having something. So that, so I always want to tell people like it's not forever, but it is, and it's for now. And then we can always, look at that. So
Hopefully not forever.
yeah.
And
Yeah.
I think that's important too. I think we get so complacent where we're with the same company forever, which is great. But sometimes you need to make sure that you're with the, right coverage that you need. And sometimes that requires that you go to a different company for that. Maybe if we can talk about understanding deductibles and coverage limits, I think that's really important. A lot of my clients, I'll check in with them, every year, just kind of see how things are going. But one of the things that I really harp on is that you really should have your insurance evaluated. I mean, every couple years, but maybe even every year. And the reason why is we're finding that you may not be fully covered to what you need should something happen. And it's really important that you have an understanding of what that looks like for you because you are like, "I have insurance, I'm good." Well, if your home value goes up, you may not have enough coverage for what
Exactly.
your value is currently. So maybe if you could touch on that a little bit too.
Sure. Yeah, I always let my clients know, always look at that at least every, I would say, at least every 2 years, but definitely, every year shop that around. Inflation, your home's, obviously worth more. If you put, a lot of people do, remodel in their home, they put new tile down or granite countertops or, more, whatever that looks like, they're putting 30, 60,000 back into their home. Well, you want to make sure that your insurance, you know, is correct because God forbid anything happens, then to rebuild it, you want to make sure you're getting that money back too, so it's really important. So I always tell people, you're putting 30, 60,000 in there, make sure, within that year or next year for renewal to double check to see the replacement cost because now your replacement cost has gone up. So that's huge. I always tell people that as well. Deductibles is just kind of the $1,000 deductible is really not happening anymore. They used to have $1,000. That's not going to happen. A lot of companies are up, making it to where the minimum is the $2,500 deductible. And so, higher deductible, a little bit lower premium. So my sweet spot is 2,500 or 5,000. I think you're not going to really put a claim in. I mean, you shouldn't, but less than 5,000. So I always say, if you want to beat the odds right now with the cost that's a little bit higher, I would just say either 2,500 or a $5,000 deductible is kind of like the sweet spot right now. So,
Yeah. And
and
that's the
yeah.
other thing too, when we're checking in with clients of like, yeah, but I don't want my insurance to go up. It's already gone up. Well, when
Mhm.
looking at the deductibles, they can actually increase their deductible and their overall premium is not much more, but making sure they're fully insured. And most
Mhm.
people have, increased their income, maybe have a 401k they can pull from
Yep.
in an event that they have to pull from a deductible. So it makes more sense for them just to go with the higher deductible and keep the lower premium to keep their payments down. So there's structuring
Exactly. Yeah.
that you can do in there to be
Mhm.
able to help that. And like you said you really don't want to put in you don't want to put in a claim if it's under 5,000. And I think it's important for people to know why and how
Yeah.
claims can impact your premiums. So maybe if you
Mhm.
want to touch on that.
Yeah, I mean, there's so much that goes into that. However, I see a lot of people, a theft too. Someone, stole, whether it's a watch and then, and maybe it's a $2,500 watch, and not that that's, inexpensive or anything, but you really don't want to place that on your homeowners. Your homeowners is really designed for catastrophic, something happens, catastrophically. So if it's something like that, or, maybe if that happens, you just got to kind of look at it. Is it really worth it? Because you're going to get it's almost like a point on your record, if you will, like a DMV. You're going to get a point, and your claims follow not only you, but it follows the house. So a lot of times when a new purchase is happening, we run the reports and it says, oh, there's a claim on this house. And we can go in, a little bit further and say, okay, well, it's not obviously the new clients or the new buyers rather. So we can kind of fight for that a little bit, but they will follow you. And it usually follows you anywhere from 4 to 5 years, 3 to 4, it kind of depends on what it is. But if it's, catastrophic, they kind of look at that like, it's out of your hands, but it's just like the
Yeah.
DMV. You get a point on your record and it will follow you.
Yeah,
So,
I've been seeing that because, and you guys are amazing, and deal with me asking for quotes all the time for clients before they put in an
yeah.
offer because it's just all over. And we don't know what the previous owners did. If they had several
Hmm.
claims because of property condition, maybe you're not the owner, but they see, well, is there something going on with this property? And could
Yeah.
that be future claims? So those could stick with the property, even if it wasn't you that placed the claim, and could have an impact on your deductible. And if you're the one putting in the claim, that can impact your resale. If people are getting
Yeah.
quotes on your home and the insurance is higher, it makes it less affordable for them. So
Yes.
most people are like, oh, but that's what insurance is for. It's like medical
Hmm.
insurance. No,
Yeah.
it will follow you, just like you said with D&B and your insurance cost. And, so it's really important to make sure you consider that. And maybe if you
Hmm.
want to touch on a couple of the add-ons and things like that, because I know that all policies aren't the same.
Sure.
And that was one thing when I was learning insurance. I was like, it's so confusing because you have like, your basic insurance and then extended and like, but it's not fully covered, but then you have extended. So maybe if you want to touch
Yeah.
on that a little bit.
Extended is basically buying anywhere from 25 to 50% on top of the coverage A. So say I'm just going to throw it out there because it's an easy number, $100,000 on your coverage A. If you added 25 or 50%, so if it's 50%, be another 50,000 on top of your coverage A. So really, a lot of times, you're covered at, 150,000 and not 100,000. So you can always do that. And we always normally quote either 25 to 50%. We always have that all our quotes rather, excuse me. Water backup coverage is huge. A lot of people don't realize it, but like say for instance, sewer, drains, maybe you have a toddler that comes in and puts something down the toilet, you guys leave, it overflows, and there goes your counter or your cabinets and your flooring. So I always say that's very, very important to have. It's really not that much, depending on, different carriers, but it saves you longer it saves you in the long run to have it. So that's a huge add-on that I always put it on there, and then I talk to the client, and sometimes I have to take it off, but it's something that I really try to always put that on the quotes as well. Um, Umbrella policies. I always say if you own a mortgage, you need an umbrella policy. It is an extra layer of liability. Um, it's basically, you get 1 million, 2 million, however, whatever that looks like for you. But it's just really, you think of it as an umbrella. It's covering your auto, it's covering your home, it's covering your family, it's covering your 401k, it's covering all of that. Because God forbid anything happens, you have a pool, someone comes over, they're gonna, God forbid they get hurt, they sue you. You can use your umbrella, policy to help pay for lawyer expenses, the settlement and things like that. So it's really protecting your assets and your, because your 401k and stuff, that's all safe until it's not. So I always tell people, if you owe a mortgage, you definitely need an umbrella. And really, umbrella policies are not that expensive for the year. They maybe run
I think mine was
anywhere.
500 and something.
Yeah, maybe. I
Yeah.
mean, at $1 million, so you're covered. It's just kind of, and then if you have kids, younger kids, that drive, God
Yeah, that
forbid,
drive.
we have friends, and it's just an extra layer of liability, and it just really
Yeah.
protects you. So I always recommend an umbrella policy, and it's really not that expensive to have it, and it's
And
just.
it's completely separate. So we're talking about insurance and it says add on here
Mhm,
that you could do at that time. But let's say you already have your insurance, you just go set up a separate umbrella policy. So it's not like you have to do it at the same time with your insurance, or
mm-mm.
you can set up a separate umbrella policy. They will need all of your information, which is the hard part, but around
Yeah,
all your assets and whatnot. But you could set that up separately, and you can pay it annually separate from your
mhm,
mortgage, to have
exactly.
that as well. But if you are self-employed, if you have, like
Mhm.
you said, younger kids that are driving, anything that is an added layer of risk that you have, you
Right.
definitely want to have an umbrella
Absolutely.
policy, which is
Absolutely.
really important, on there. So I think that
Yeah,
it's great that we touch on that too, because really it's overall asset protection as well. Um,
exactly.
Maybe if we want to talk about what you can touch on here that you think is important to talk about, gaps and lead to regrets and stuff like that. So
Um,
um, I know that one big one I'll touch on while you look at this is that
sure.
if you have a mortgage and you have your insurance included in your mortgage and you decide to go change it, you totally can, totally fine. You have to make sure you update your mortgage company. Just call the 800 number on your mortgage statement. Let them know that you've changed your insurance and give them the new insurance information, because a couple things. If you do not do that, they can force place insurance. And now you are paying their insurance and your insurance. And they're not forgiving to say, oh, you had insurance. We're going to no, you're going to pay both, because it is in your disclosures that you have to update them if you make any changes. The other thing too is just
Correct.
making sure all of your insurance is updated with the right mortgage company. So servicing, which is who you make your mortgage payment to, which could be different than who you got your loan through, but your loan terms never change. If that changes, just give them the new person that you're making your mortgage payment to, or the new company, give them a call and just make sure that your insurance is correct. I know you could speak on this too, Jackie. So many times it's supposed to transfer over, meaning that they give it to the new servicer. The new servicer is supposed to update the information that it's with the new mortgage company. Doesn't happen sometimes, and then what happens is your insurance doesn't get paid. You get a cancellation notice. You call us if you have a good lender that's still there for your customer service.
Mhm.
We have to help you get it all initiated, set up all the things, and then now it's just more stress. So if
Yeah.
you do change insurance, or who you make your mortgage payment to changes, it is good practice for you to call them and have a conversation to make sure all of it's updated.
Yeah, absolutely. I mean, you said it perfectly. I think the biggest thing that I see, because we write a lot of, I write new business, but loans get sold, and that's fine. But that means usually your loan number changes, and you can correct me if I'm wrong, but So that all changes. So
Mhm.
we need to update your evidence of insurance and get that uploaded to, like, we have a portal as well. And so I just say, if it's sold or you're changing something, it definitely let your insurance know, because like like Kristen said, they will force insurance on you, and from what I understand, is very expensive.
Very expensive.
So
I'm like, do they just have like a note that says go to the most expensive? I don't know, but I've
yeah,
never seen it like, oh, that saved me money. No,
yeah,
never.
exactly.
What about
Yeah,
adding another thing that comes up a lot too is we're in
sure.
the day and age of people adding ADUs, right? Additional dwelling
Hmm.
units. So maybe
Hmm.
talk about the impact of insurance on that because I have found that, I mean, if they're doing it correctly, they have to go to the county, get approval, all that kind of stuff. But maybe touch on that a little bit if you're
Correct.
seeing anything in insurance coverage.
Yeah, no, I mean, I have no problem adding ADUs. So we just added one just last week to a client. So, but it's just super important to address that, because your other structures doesn't cover an ADU. Your other structure is more like maybe if you have like a like um like a
Outhouse,
covered
barn type thing
patio,
or something.
or
Mhm.
yeah, something like that that's there and it was there once, but an actual ADU is different, and it usually needs its own policy. And if you rent it out, then definitely needs its own policy. But if it's for like private use, it's fine, but it definitely add it on, because I mean you're building that, so I'm sure it's going to cost, whatever it looks like.
A
So you want to
lot.
make sure that, yeah,
Yeah.
you want to make sure that that is on there too. But no, there's been no problems with that at all. So
Awesome.
insurance,
Yeah.
I think so many people are adding those home, in the back, but I haven't seen any problems with that. So, but just make
Especially with
sure,
liability, even
yeah,
beyond just making sure the
exactly.
house is covered at that point is liability. If something happens in that unit, like it could
E-
be all bad, court stuff,
Exactly.
like all kinds of
Hmm.
proceedings and things like that too.
Hmm.
And then lastly, as we kind of come through here,
Sure.
maybe just touch on the other types of insurance, flood, earthquake insurance. I get that question a lot, like, is my house
Yeah.
covered under earthquake? And I'm like, well, we're in California. But maybe if you want to touch on
Yeah.
those a little bit too.
Your earthquake insurance is, I always say, why not get a quote for it? It doesn't hurt. I mean, we are in California. I really push it more in the Bay areas, obviously for obviously reasons. But it's something that, it's worth getting a quote for, and it's just peace of mind. Um, it's not if, it's when it's going to happen. And, it's not, I just say, always do, get the quote. Flood insurance is, with climate change, and same with earthquake. We just never really know what's going to happen. A lot of times, the insurance and the mortgage company, we kind of work together, like, okay, where is this located? Um, and we get on, FEMA, and we find out, okay, well, this is a flood zone, so we definitely need to have flood insurance. And your mortgage company sometimes will say no, they have to have it.
Hmm.
And sometimes, maybe you're just been in a situation where it's been a flash flood, and it's like, wow, it never floods here, but oh my goodness, this last year this happened. So flood insurance is the cost is getting a little bit up there. I'm not going to lie, just because of everything that's happened. However, it's it's great to have, because you just never know what's going to happen. So, but we always try to check FEMA first,
Yeah.
if we really don't know. So if you're shopping around, or you think, oh, I wonder if I'm in a flood zone, just go jump on FEMA or ask us, and we can always look and make sure. But all my friends and family have flood insurance, because we just never know. So,
Yeah, and I think that I mean that's if flood's required, you have to have it. It has to be included
hmm,
in the mortgage. You have to pay it. There's no way around it. But if you don't have to have flood insurance, it's really important to understand your surroundings. If you're by big
hmm,
canals where if they
hmm,
break, your water goes into your property, even though you're not in a flood zone, it might be a good idea to consider
yes,
it. If you're by a big levee, things like that, right? And maybe you just go with a really, really high deductible because it's
right,
very likely that it won't happen. But if it does, you'll come up with $10,000 more than you can 300, 400, 500,000, right?
yes.
So having that same with earthquake, the likelihood that we in
Hmm.
our area, depending on where you are, Sacramento, Placer County, are going to have
Yeah,
a big enough impact that you would use the insurance.
right.
you can do a high deductible on that if you choose to, if you want it, but it's not required on the mortgage. So just some
Yeah,
extra things that you could choose to do if you wanted to.
correct. Yep.
Now, that kind of brings us into why we're on this call today. Like I said, I am obsessed with adding value to my clients and
Mhm,
protecting the assets. I think that getting you a mortgage and a loan is great. I have such a connection to helping people with home ownership, but it's beyond that that's really important too.
mhm.
Making sure they're in the right loan, but how to protect those assets and the other assets that you're making long term. And I
Mhm.
think that making sure these things are in place and that you're considering them and understand them is really important, and doing your annual assessment or biannual
Yeah.
reassessment is so, so important. I every time I talk to a client, I'm it just, oh no, we didn't even think that we should even review that. And although we
Mhm.
don't like the response sometimes that you're going to have to pay
Yeah.
a higher premium, again, you can look at solutions. Like maybe we just go to a higher deductible because we can afford
Mhm.
that now if it's something major that happens. Might be a good strategy on that. And then bundling, may save you as well. If you have auto, you can include it wouldn't be included in your mortgage. So if you're like, I don't
Mhm.
want to include that into my mortgage payment,
Right.
bundling just means that because you have multiple types of policies with the insured company, that they will give
Mhm.
you a deduction and discount. So
Yeah,
it saves you some
definitely.
money on each of those independently, which is really
Yeah, just to touch bases on that, a lot of companies, you know, 5 years ago was all about bundling. Right now we're kind of going through a shift. However, there's a lot of companies that just do bundling. And you just want to optimize, like, it says, as far as all the discounts, because you do get a lot of discounts when you bundle. So, and then, yeah, so definitely reach out and see what that looks like. Um, Never know. Say, hey, save money, got to save some money
Yeah, I mean that's
somewhere.
right. I mean right now it's just, and I think it's just reviewing everything,
Mhm,
really having a good pulse on your financial situation, your assets. There's many ways to protect your assets, insurance being one,
mhm,
life insurance,
mhm.
estate planning, all of these that we'll be talking about in the future as well. But it's really important that if you have a home or preparing to buy a home, that you understand how home insurance works, and it's not all the same. What I
Yeah.
will say and that I appreciate and respect about you and Renee when I work with you guys is that you really care about your clients and about their asset protection. Sure, can we get them a lower discount or lower premium or can they give me a lower premium somewhere else?
Mhm.
Usually they can, but then when I give it to you guys and have you compare, you're like, yeah, because they cut the coverage here and they're not giving them this. And then if we were to do an accurate assessment, they're actually higher. So making sure that you have someone advocating for what you need is really important. Like I said, I feel for me, I would rather go with a higher deductible and be
Mhm.
fully covered and figure out a way
Right.
to borrow the money, take it from my 401k if I had to, than to be
Mhm.
underinsured and not protected from all the things that will come up and that do matter.
Yeah, absolutely.
So
Absolutely.
advice matters. Who you work
Mhm.
with matters to make sure you're protected. It's not about getting you into a home. It's not about getting you into a situation that's cheap. It's about making
Mhm.
sure that it's protecting you adequately and making it affordable. And sometimes it's hard to wrap your head around paying an extra 50
Yeah.
bucks a month when
Yeah.
you're already paying a little bit higher for all of your expenses. But is 50 bucks a month worth $100,000 in loss? Like
Yeah.
it just, this
Yeah.
things like that when for these purposes um,
Right.
matters more than maybe some of the memberships that you have that you can let go of in the meantime.
Yeah, absolutely. I agree.
Yeah.
Well said.
Anything else that you would add or that we haven't
Um,
talked about that you want to touch on?
just I think we had talked about this before we started recording, but trust.
Yes, yes,
If
yes.
you
Thank you.
if you have a trust, please add that to your homeowner's policy as like an additional insured, or how whatever that looks like for you. But definitely add that on there. We have seen situations where, you know, a house burns down, but it wasn't in the trust. It could be messy. So let's get ahead of that. And if you have a trust, just make sure you add that on as an additional insured. So important.
Yeah,
So
I know I was
yeah.
reading about it when I first learned about it. I was talking about how some attorneys are using it, saying, and the reason why is that when you have a trust, you are the owner of the trust, but it is a
Mhm.
separate entity. So what they're trying to say is, well, the trust actually owns the property, not you.
Correct.
You dictate that ownership in that unit, which is called the trust, but the
Mhm.
trust actually owns it. I mean, there's back and forth on it.
Yeah.
Would they win? Probably, I don't know. But
Yeah.
just to
Yeah.
make sure that you're protected, it's really important that if you have an estate plan and a trust set up, or your parents do, or your family
Mhm.
do, or anybody, have them just call them. It's an easy phone
Mhm.
call. Call the mortgage
Yeah.
insurance company, say, I'm going to send over my certification of trust. Can you
Mhm.
please add this on my policy so that it shows that there is a trust in place on this property? It's
Yeah.
easy.
Yeah,
It
super
takes a
easy.
simple call. Yep.
Yeah, the underwriters look at it. Sometimes I'll ask for the full trust, but I mean, that most cases it's just the
Yeah.
certificate, and it takes, it maybe takes a couple, a good couple week, like a week or two, but it's definitely doable. So just
Yeah.
just make the call and
It was
add it on
super
there.
easy when I did it.
Yeah,
All I had to do was upload it into
yeah.
their system or email it. And if you
Hmm.
have rental properties, do it on any
Hmm.
property you have in the trust. You make sure you do it on all of them. And they just updated it. So it was
Yep.
really easy. And I kept the correspondence that I requested it in the meantime,
Hmm.
right? All the things so you have it
Absolutely.
there.
Yes.
Um, but it's really easy. And then just make sure that you're protected on that. And there's no reason not to do it. If you're
Yeah.
buying a house and it's in the trust, just do it from the beginning. That way you're already set up that way as well.
Yep. And just a quick note. A lot of companies are going out. I mean, all companies do this, and they will assess, like renewal or and they do inspections, right?
Hmm.
Um, the biggest thing that they're looking at is trees touching the roof. So I just tell everybody, on that the spring comes, do like spring cleaning outside and just make sure your trees just kind of back, don't anything to not have your policy non-renew or just kind of get in front of that. So I always tell people just, kind of make sure your trees are cut back, nothing's touching the roof, and then, so we can just kind of keep
Yeah,
keep
thank
them
you. I'm
away,
glad you touched
so
that because I was gonna touch on that too because yeah,
okay.
that's what I'm seeing too is trees touching. Also, what I've seen a lot of, and your feedback would be great, is not having any shrubs against the wood of the home. So
Right.
even just taking like rock and putting like a
Hmm.
boundary around the outside, you can make it pretty.
Hmm. Hmm.
That has been a huge thing
Hmm.
too that we've seen. So there's no
Absolutely.
way that the fire would just connect to the wood. There's like a little bit of a barrier
Yeah. Yeah.
that's on it. And then obviously the things that are really important is if you have a lawn that has high ground, just mow
Hmm.
it. As we go
Yeah.
into the summer, if your
Yep.
neighbors do ask them to kindly, like we have people in our
Hmm.
back, we have an open field behind us, and so we always
Hmm.
have to remind them, summer's
Yeah.
coming, we need you because it gets really high, and like we need you
Yeah.
to like cut it down so that we don't have an issue on our side as well. But
Exactly.
just making sure that there's
Hmm.
nothing that could be a fire issue because they
Right.
are doing drones across
Yes, they
properties
absolutely
every
are.
year
Hmm.
and they see everything. So there's no
Hmm.
no hiding from any of it. I had
Yeah.
one client, they're like, they told me I had junk all over my house, and I don't have junk. I just have stuff that I have stacked out back. And I'm like, well, they're calling it junk. So
Yeah.
we're gonna have to find a different way for you to,
Yeah.
put
Store
that
that.
somewhere in
Yeah.
a shed or something, but it could
Yeah.
catch fire, if it's
Yeah.
touching other things. But just
Yeah.
look at it and say, is there anything that could easily catch on fire? And it probably would be an issue with the insurance company. And it's better to
Yeah.
take care of it than have them start now looking at everything.
Yeah. Exactly.
They dig in deeper. They see
They'll
something like, oh, let's zoom in on this home. So from
Yeah.
afar, make it look really pretty, and you probably won't be
Yeah.
bothered.
Yep. Exactly.
Well, Jackie, as always, I
Okay.
appreciate your time, and I really
Yeah.
appreciate you jumping on here. I know you care about protecting people as well, so I knew that this would be a great fit to have you on there. And thank you so much.
Well, thank you for having me. I appreciate it.
No, you're so welcome.
Okay.